All right, perfect. NFP in 5 seconds. Let's see what we are dealing with. And afterwards, we can start reading the fair value gaps again. Time to gamble. Yes, perfect. Perfect. A lot of people gambling right here and blowing their account. But we take it to a different approach. Now, right here, the dollar can do, of course, well, simply said, whatever it wants to do right here. I do still think it can continue higher. So if the fair value gaps, the bearish fair value gaps start to be disrespected, bullish fair value gaps start to be created, then we can definitely look to get involved as well on, for example, ES and NASDAQ, where ES and NASDAQ right here, it would be a very nice NFP setup if we get a retracement into these fair value gaps right there to then continue higher off of that. So the 4-hour fair value gap right there. And very simple, or simply said, what you would want to see in those 4-hour value gaps is just simply your entry pattern. Your entry pattern is already the confirmation that price wants to potentially continue higher. So if we get right here a 5-minute ST plus re continuing higher, then that is exactly what you would want to see. So with NFP, it is quite important as well to understand there's a lot of emotions involved, more so than just your normal setup. And the reason why that is because it's very fast paced, right? So when it's very fast paced, you always feel like you're already missing out. You almost feel like this is already the real move, whilst it could definitely still continue lower from here. So it's very important to have patience, just wait for your normal setup. It just happens faster. So there's more emotions involved because it happens faster. Very important to understand. Overall, if we look at Euro USD, for example, right here, we also see the 4-hour value gap right there, which we could potentially continue higher from right there. If we get the right confirmation, it is still waiting with NFP. So no need to rush in because the entry pattern to form also takes a while. Let's see, GU right there. On the 4-hour, I would argue that GU also has quite a nice setup actually, right there with the breaker, the fair value gap. But overall, higher time frame above the 4-hour is not super clear. New Zealand dollar, US dollar, not the clearest because we're running into a weekly fair value gap right there. Still that we're struggling with. See Australian dollar, US dollar here as well, not too clear, not too clear. US dollar, Canadian dollar, 4-hour fair value gap right there. US dollar, CHF, 4-hour fair value gap, which is quite interesting as well. Let's see what we would want to do. And silver not following through off of that fair value gap, which is quite important to note. Do we then want to target these lows right there? Gold, same situation, not following through on the fair value gap, a lack of a new fair value gap being created right there, where the first target would have been this low, but we're already below it. There's no real reason to come back lower as well, so we could potentially target the low right there. Bitcoin, not the biggest impact for NFP. Let's see crude oil. Crude oil is really interesting, and the reason for that is because if we have this monthly context following through right there, that could be really nice to eventually catch some trades as well, hopefully. Not the retracement that I would like to see. Ideally, retracement into a fair value gap right there to continue lower, create a new fair value gap of that, potentially even the entry pattern could be very nice, but currently not coming into a premium rate just yet right there. So let's see, what are we dealing with? On the dollar, no signs of stopping currently right there. No signs of stopping currently. Still pushing higher for ES right here and NASDAQ. All right, so since ES and NASDAQ in itself have been quite strong compared to the dollar, where if the dollar is pushing higher, ES and NASDAQ are not necessarily pushing lower very quickly. And I believe that is because ES still has that all-time high that it wants to take out right there. So in this case, this can potentially still continue higher right here, which will be interesting. On indices, when the entry pattern forms after NFP release, do we still have to wait for 9:30 a.m. equities open before entering a trade? Really depends on where price action overall is. So let's say we just got the ST on the 5-minute and we barely got the re and we're still hovering somewhere here, then I would wait for 9:30. But a lot of times what you would already see is that since NFP of course is more volatile than equities open, you could already see the ST plus re happen quite convincingly. When we have a quite convincing ST plus re already happen, then you can enter before 9:30, and 9:30 will likely still consolidate a little bit, have some weird price action, some liquidity sweep. So make sure your stop loss is in overall a quite safe place, but you can already look to enter ahead of 9:30 for sure. So if that does happen, that could be quite nice here on Nasdaq, NES, etc. Let's see. On YM not the cleanest right here. I would prefer Nasdaq and ES right there. ES overall being the strongest still. Then if we take a look at DAX as well, DAX already came into this fair value gap right there. So it's not the first time it came into the fair value gap, which is always not something I prefer. And then it becomes quite difficult to actually create a boundary when to go into the 5-minute time frame right there. Euro US dollar completely disrespecting the 4-hour value gap currently. So let's see what we want to do there. We want to actually reach for the lows. When we do continue lower like this and we continue higher right here on the dollar, which is something good because then we have potentially high probability conditions coming into next week. The only thing is then we don't really have great conditions today, meaning we do not get the typical retracement to then get involved, to then continue lower or higher. No, then it's just one push higher or one push lower. So it makes it a little bit more difficult. Can we just break out of the range already? Yeah, hopefully we can. Hopefully we can. And currently it seems like it wants to do that. But again, it's quite early to speak right now. Use dollar CHF as well, pushing higher currently. Imagine if we swapped a lot and then went back into the range. Yeah. Oh, yeah. Yeah, can you imagine if we just consolidate for another 2 weeks? That would be crazy. Let's see. Mainly, my main interest is still on the indices, because even if the dollar's pushing higher right there, the indices are just they are strong enough to still make another push higher. So then the retracement that happens during NFP is the most interesting one. Because if the others are just pushing higher with no real retracement to then get involved, it's just not super interesting. Because I do not want to chase price on NFP as well. I only want to get involved if the first leg right there is a retracement, to then continue lower or continue higher. It's very important. I'm not interested in looking to get involved here on the 1 hour, 15 minutes with a huge fair value gap. Again, it's also quite an interesting topic. The bigger the fair value gap does not mean that it's a stronger fair value gap. I would argue the bigger the fair value gap, the more chance of manipulation as well. Where the smaller the fair value gap, I would argue it is weaker, and the reason for that is because smaller fair value gaps are just not universally agreed upon on different brokers, etc. So is it truly a fair value gap that we are looking at, or is it just that particular broker fair value gap that we are looking at? So that's a difference. But the bigger the fair value gap, you would argue, all right, they're all universally agreed, so they're all very strong, right? No, a fair value gap does not necessarily mean that price in itself is very strong. A fair value gap can also lead to manipulation. So the momentum can turn into manipulation, which we talked about in the first few sessions, which is very important to understand as well, which happens quite a lot during NFP, FOMC, CPI, things like that, where you have big fair value gaps going towards one side. People think it's going there, and then it does the exact opposite, which also is exactly why we use a sharp turn in the first place, because that is when we have fair value gaps going towards one direction, and we want to see the exact opposite as well. So that's very important to note. Now, we can look to continue higher off of a fair value gap like this. The only thing is, if we enter now off of a 5-minute fair value gap like this, then where are you going to place your stop loss? Yes, you can place it on the middle of the fair value gap somewhere to then continue higher right there, try to catch a move. But I would argue that this is a very forced low probability trade. And the reason for that is mainly because of your stop loss. I do not think the entry is that bad, but your stop loss being right here in the middle of nowhere, basically, is just not something I would want to do. Now, let's say you want to see a trade like this and you would want to target the monthly fair value gap. It would be a little bit different because then it's a swing trade, then it's a position trade. And even then it's only a 1-to-1 right there. So again, that is not a high probability trade in my opinion. So that is also why I avoid trying to chase that expansion. I would rather want to see a retracement to then continue higher or lower. And if that does not happen, then there's no real opportunity for me on NFP or CPI or FOMC, whatever it may be. We were supposed to destroy February, not exactly. Yeah. Exactly. Let's see. Yes, on the 4-hour having somewhat of a rejection from what we're seeing right now. At least the wick right there. So that could be quite interesting. In the next coming hours, if we prevent this 4-hour value gap there from being created, that's of course a great sign as well. So let's see. Still very early price action, right? Very early. Nothing really to do right here. So we can still wait right here to see whatever it wants to do potentially. Oh. All right. Running into, as we know it again, the first resistance area. The first 50-50 area right there. Nasdaq, same situation right here. Getting the first rejections higher, potentially creating a sharp turn higher. Let's see what we are doing on EU. EU having the biggest retracement. Now, this could be quite interesting on GU potentially, because GU is a little bit stronger, which has the breaker and the fair value gap right there sitting as well. So a little bit more confirmation here on GU could be quite interesting to potentially continue higher, continue lower. So let's see what we want to do. Australian dollar, US dollar is definitely not interesting to me right here. This is not really interesting to me. Although we are still in the monthly value gap right there. And it actually became a previous month's low sweep. So we have a 4-hour ST. So I say not interesting, but it is quite interesting actually, because it's a beautiful sweep right there. So let's see what we want to do on these pairs. New Zealand dollar, US dollar is not interesting to me, mainly because it's a clear consolidation. Don't want to do anything here. US dollar, Canadian dollar as well could potentially be quite nice to target the weekly value gap that we have sitting right there. Then US dollar, CHF could be nice, but I would want a little bit more confirmation here to see if we want to follow through on the weekly value gap. Where a lot of pairs, of course, it's also important that I'm mainly looking at the indices and the indices because it has more time still agreeing with the fact that we can still make a move. Where Euro US dollar still, of course, with NFP, there's a lot of volatility coming in. So the time period of your the London major kill zone is extended a little bit, but it's also the end of the week. So be careful with trying to take a trade and then not taking into account that the market will close as well. Very important to note. Do you consider a fair value gap mitigated when price touches its high or low without really going inside of it? Whenever a fair value gap is traded back into, then I consider it mitigated, if that makes sense. So for example, the 4-hour value gap right here, this 4-hour value gap is simply mitigated, if that makes sense. Oh wait, okay, like this, for example, on EU, where it touches low right there? Do you consider it mitigated? Yeah, that is mitigated. And especially if we now get a rejection first, then the fair value gap is not interesting anymore. As in, this currently acts as a boundary. Then after we have some kind of rejection, a little bit higher, a little bit lower, and we create new fair value gaps lower or continuing higher, that is mitigated for me. When does Asia pairs close on Fridays? Ooh, the exact time I'm not sure. I think it's the same time right there. So we also have to take that into account right there in 8 hours and 14 minutes right there. Definitely have to take that into account as well. Let's see. And overall, Asia pairs right there are heading into the end of the week, heading into actually market close, still a little bit more volatile than the London majors. But still, we still have to take into account, of course, overall that the market is closing and it is a Friday. So if your stop loss is not in a safe place, as in you're not taking a 1 hour trade minimum, then I would argue, all right, it might be better to actually close the trade because you never know what happens during the weekend, which is just simply you're at high risk in the weekend, which is not something you want to be exposed to. You have zero control and it's not nice. It's also not good for your mental state. All right, running into that first resistance, I do think we can still look to potentially sweep that low. And to be honest, I like it when we sweep that low still to then continue higher. Because then we have had the rejection off of the 5-minute fair value gap right there. We still sweep the low, trying to sort of show price action. We want to continue lower, but we fail to do so because we do not have the strength. We do not have the bearish momentum. Perfect. Then we can look to continue higher right there. I would prefer a scenario like that. Let me see. I meant when, for example, I'm bullish and there's a bullish fair value gap which high is at 4900 and price comes down into 4900 and not lower than runaway higher. Okay, the high, so not actually trade into the fair value gap. Okay, when it does not actually trade into the fair value gap, then no, it's not mitigated. No. Okay. Okay, yeah, now I understand it. Yes, exactly. So then I would still be able to use it. For sure. Yes. Let me see. Nasdaq again, the price action overall on the highs right there. And I don't necessarily, and in the enrollments, etc., I never really look at the highs because I do not think it is super relevant to look at highs to sort of frame your trade ID purely based on what is above the highs. As in, if we have liquidity right there, there's liquidity everywhere. This is also trendline liquidity. There's also lows that is liquidity. There's also liquidity right there in the form of equal highs, equal lows, etc. So framing a trade ID just purely based on equal highs, equal lows, trendline liquidity, for me, has never really worked out, and I do not think it is something you would want to do. You're mainly looking at the price action leading towards that. So this can be any sort of high that can be taken out. But it is a small extra confluence that we can look at, as in price does like to target those highs right there. But again, I do not frame my trade ID just purely based on those highs. So that's also quite important to note, because that was a big mistake I used to do actually, where I just saw equal highs and I thought, all right, those equal highs, they definitely need to be traded towards. And that's just not the case. Just not the case. Let's see. Again, same on NASDAQ as on the ES, where I would prefer a scenario where we sweep that low to then have the lack of a new 5-minute fair value gap being created, or it gets disrespected. 5-minute fair value gap going higher right there to then get your re as well, to then continue higher off that. I would prefer that. That would be my ideal scenario right here on the indices. And if we do not get that, then that's also an indication that I simply do not want to get involved. And that is also when we already have the rejection right here of the 5-minute fair value gap. So this is currently, if it wants to push lower, it should create a new fair value gap lower. Which if we fail to do that, then we might have some bullish momentum in the market as well. Let's see on GU. GU and all the other Forex pairs right here, not strong enough to make a significant move. Where the dollar's just pushing higher right there. Dollar's pushing high. And it is, I think, also quite important to note, again, how the characteristics of the news events are, right? Where the major move does not happen on FOMC because we still have NFP to come. And the major move happens at NFP, happens at the last big three news event of the week right there. So this is where if we currently continue higher, I would not expect a sweep anymore. If anything, if this is really volatile, it could still reach this monthly value gap right there today. So then next week, we have to see how we want to react with the monthly value gap as well. And that is something, it's nice, the big three news events, but it's also a little bit unfortunate because they usually prevent you from being involved in a move that was quite obvious. As in, the monthly value gap right there being traded into was quite obvious. News events right there oftentimes prevent you from actually being able to participate in a move. So also don't try to force your will onto a move and being able to or trying to force your way into the market by catching news moves. It will not end very well. So right here, if this continues higher, then I'm expecting not a sweep of those highs. I'm more so expecting a run right there to target the monthly value gap as well. So then only the real interesting instruments right here to me is ES, NASDAQ, and the rest of the indices, or mainly ES and NASDAQ. And the Forex pairs are just too correlated with the dollar to make any significant move right there. Potentially continuing lower, yes. Continuing higher, moi. So let's see on ES and NASDAQ if we are close to the 5-minute low currently. There we are. Let's see what we would want to do. It's already a first good sign that we are not creating immediately a new expansion phase on 5-minute, right there, continuing lower. And the same goes for NASDAQ as well. So heading into equities open, that is definitely quite interesting. So YM have anything? YM more bearish momentum, simply because we are creating an expansion phase right there of a bearish fair value gap on the 5-minute. So a little bit more bearish momentum here for YM compared to NASDAQ and ES as well. Let's see on DAX actually. Same situation. Here regarding yesterday on crude oil, I opened a case study on this phenomenon. During all the kill zone sessions, the price gravitated towards a 4-hour value gap, then started to drop quickly after the latter. What comes to mind is a price consolidation process within a fair value gap. What do you think based on your experience? It was, let me check really quick right here. This 4-hour value gap right there, that consolidation, I believe, right? And the reason why that is consolidating is mainly this whole area right there. This whole area right here is a 50-50 area. And what I'm referring to right there is the first area between the monthly value gap comes into the daily value gap and the 4-hour value gap right there. So the first areas that price encounters when it wants to continue lower, when it makes the transition from moving towards bullish price action that we had towards bearish price action, we will have quite a lot of resistance. And Resistance, simply said, leads to consolidation in that case, where eventually the faster price action and the cleaner price action happens when the resistance is gone. So for example, the lower we go right here, the less resistance we have, which you might know as well as a silver bullet trade. And a silver bullet trade works out quite well oftentimes because there's no resistance left. So it happens quite fast. There's only retracement to then the expansion being quite fast again. So that is a major part of why I think we were consolidating right there as well. Ahead of news, this is still affected by NFP overall and by the big three news events. So it's also a huge factor that we have to take into account right there. Never closed fully below the daily VFI gap, which I would like to see, preferably. So there's also a huge part that still that resistance is a little bit there, and respecting, of course, the premium array that we have as well. So there's multiple signs, but that would be my thought process right there. Where eventually we can definitely look to continue lower. This is just a bit tricky price action where could have very well been that might have been taken out before you actually catch the right move. Oh, well, this explains actually quite a bit more, where we have the 4-hour VFI gap. We actually follow through on the context, which I could not see on the 4-hour right there. And then we retrace all of a sudden. So that explains it a little bit more as well. Eventually, we continue lower. Interesting. A move actually happened during Asia right there. The rest of the day was just consolidating. Interesting. Let's see. Is failure to create an immediate expansion phase after coming into a higher time for VFI gap usually ideal, or only directly after news events? Usually quick price action is high probability price action, right? Yeah, it's ideal. And the reason I stated it's ideal right here is mainly because it's just an extra confluence. As in, if we now have, for example, our bullish fair value gaps going higher again, then that tells us a lot, right? Because that tells us that the bearish fair value gap right there was not strong enough. We have bullish fair value gaps continuing higher again. So overall, there are more confluences to the trade, if that makes sense. Where if it does want to happen fast, and it is also, like you mentioned, it's quite a news characteristic where this is something we do during news, where it first comes into the first resistance area, pushes lower a little bit more, then creates your real ST plus RE, etc. to then continue higher. That makes sense. So both are ideal, of course, as long as we just get our entry pattern. It's just an extra confluence, as I like to call it right there. But currently, it is quite important to understand as well. If we very, very confidently close below those lows right there, like we're currently doing, then I would not be super interested in longs anymore. I would not be super interested in any longs right there, and that could even lead to a consolidation overall, or could lead to a little bit more lower price as well. Let me see. On dollar, there's a monthly volume imbalance that's already been mitigated, and it's just below that monthly fair value gap. Can we treat the volume imbalance as a fair value gap and therefore not expect a run inside the higher one? Let's see. I do not really use volume imbalance myself, personally. So volume imbalances, from my experience and actually from data as well, that not only I get it, but I think it's somewhere in the gems section, where volume imbalances are a lot lower probability than actually fair value gaps, and they do not tend to hold as much. And that leads me to think that volume imbalance itself are more so a little bit more random, as in I just want to refine the PD arrays that are actually high probability, where I can confidently say, all right, this is a great chance of holding. So the volume imbalance here, for example, is not something I use right there. So it's not a premium array. It's not in my PD array matrix. If it's in yours, then yes, that would be the case. But for me, it's not, if that makes sense. So that's not really interesting for me. The highs, of course, as well, being previous month's high currently. So it's a liquidity pool. It is a premium array. So we have to take that into account as well when we come above it, actually. Quite interesting. You did not make a lesson about SMT for the indices. Is it because you don't use yourself anymore, or maybe it is not that beneficial that much? That's a great question, and both. I do not really use it myself anymore, and when I use it, there's already SMT happening. And what I mean by that is that when the move, for example, happens here, where we continue higher on the 5 minute and we get the entry pattern, then the SMT already happens because it's just a move where the entry pattern happens, etc. So there's automatically going to be some sort of SMT. So in that regard, it was not super relevant for me to look at. And other than that as well, it's SMT happens everywhere. So to sort of try to avoid my overall confusion on, for example, because we have SMT on the highs right here, actually, which could definitely continue lower, of course, right there. But what if we also have SMT on the lows? Then it's all comes back to, all right, what is the higher time frame draw on liquidity? Well, if you're uncertain on that and you're relying on SMT, then it becomes a whole messed up story where it's just full of confusion and it doesn't make sense anymore. So that's sort of my thought process. And then for my entry pattern, why I do not use it. And you can use it, don't get me wrong, because I do think it is a great confirmation. It's a great differentiator overall for your entry pattern. But I do not use it because whenever my entry pattern forms, usually there is already some form of SMT going on. If that makes sense. So let's see right here what we do want to do. This is looking a bit better. And the reason for that is because, again, when we have that third candle right now, closing quite high, then that means that on NASDAQ, we might be respecting overall the swing low right there. Again, I'm purely talking right here on the ideal scenario that I would want to see for bullish prices, which of course might not happen, right? So if we do not get those ideal things for bullish prices, then we just continue lower. But I do not want to look for lower price currently because we are still inside the bigger 4-hour Vega, which is some kind of resistance. That is also important. We did actually come into the breaker right there as well, into the overlap part. So ideally, we can see higher prices from here right now, in an ideal world again. ES right here, it's actually a little bit weaker than what is it, NASDAQ, which is also quite interesting. On the 5 minute at least, 5 minutes. Yeah, exactly. If SMT is just a bit confusing, then I would just argue. Throw it in the bin. All right, all right. These are just continuing lower quite heavily. I would not really expect any move higher right here anymore on EU, like we talk about. Australian dollar, US dollar as well. Target, nice target could be the lows. Again, I also don't really want to get involved in that move, and the reason being for that is because then we're chasing price. Break out of the range, retest OD, long until the moon, infinite money glitch, empty meetup in Maldives or something. Exactly, that's the plan. That's the plan of action. Yes, perfect. See, we are reaching consolidation high right there, previous month's high as well. Does look like it could happen though, definitely, definitely. There it is, previous month's high reached, which is the consolidation high overall. So let's see what we want to do right there. Will be a major point in if we actually are going to see some high probability conditions next week, which I would expect definitely. And currently I am expecting this not to be a sweep and for us to actually continue higher towards the monthly value gap right there. And I do think we can still reach that today actually. Now, if we reach that today, then I do think that the high of the week could be created right here at the monthly value gap where we can see a rejection already. Will we continue higher next week or continue lower? Sorry, continue higher or lower. Not sure, right? That's something we would have to see going into next week. But we can definitely get a rejection already. And when we get the rejection already, that could line up with a few other pairs that could also get a rejection right there. So let's see what we want to do right there. Quite important. Please don't sweep. Please don't sweep. Yeah. Exactly my thoughts. Please don't sweep again. Just stop before the value gap. Then we can catch both moves. Then we are good. Exactly. Yeah. Exactly. That would be perfect. Would be perfect. Yeah. So here, I'll mention it as well. The thought process for me to see if that is actually a sweep of those highs or is a run on the highs, a run meaning that we are continuing higher towards the monthly value gap. If we are running, we're always just looking to target the next premium rate, which in this case is just the monthly value gap right there. So it really depends on if this is a sweep or a run if we are going to target the monthly value gap right there. Where currently, if we are looking at the 4 hour right here, I would want to see a close above this high. Just very simply said, a close above this high. In an ideal world, your fair value gap is something like this, where it's overlapping with the high right there. That's the highest probability price action you can have when we do want to continue higher. Then the whole area right there turns into a fair value area, meaning if we retrace back towards the highs, then we can continue higher off of that, which is currently happening on the lower time frame. But the thing is that on the lower time frame, of course, we have to take into account now the 15-minute, the 1 hour, eventually the 4 hour. So it might take a while before we actually respect that high right there. It will be interesting to see what Nasdaq and ES do right there with the dollar potentially rejecting a little bit above the high. Overlapping gaps, exactly, overlapping gaps. If that third candle again on any time frame right there is just showing signs of respecting that premium, well, I would argue right now, if it were to close like this, then this right here, that third candle would be for me a respect of that premium currently, where I would not be super convinced anymore that we do want to continue higher off that fair value gap. But currently, just actually speaking about this real time right here, I would argue that this is a sweep currently. But again, it's too early to actually say if it is a sweep, because then we need to wait for as well a few more candle closes on the 1 hour, on the 4 hour right here to confidently say if it is a sweep or if we want to continue higher. Let's say this is a fractal situation right here, where on the 5 minute right here, if this was, for example, the 4 hour and we sweep above this high with those wicks right there, this is exactly what I would not want to see if we are continuing higher. Because then this wick indicates to me respect of the premium rate, and the fair value gap that we have right there then in the making would just not be super high probability anymore, in my opinion. I would rather wait for a retracement into that to then see a new move to then continue higher off of that instead. Coming into again resistance areas overall here on Nasdaq and as well ES. Here on Nasdaq, you can see it right there. That third candle that we have, this candle right there, prevents the fair value gap from being exactly overlapping with the lows. Now again, we can still continue lower, so it's just another small confluence that we have, where if we want to continue lower, in an ideal world, it's the same as ES, where right here, the low is exactly overlapping with a fair value gap. This to me indicates that it's not a sweep currently. It's a run on liquidity, and we can continue lower from that. On Nasdaq, it's a little bit different right here, and I would argue that this is more so going towards a sweep instead of a run on liquidity. Simply because of how we don't have a fair value gap exactly overlapping with the lows. If you're in a trade and price action is still looking clean at 4, but we don't have any news the next day, would you close the trade before experiencing higher spreads? Yes, ideally. And really depends on the scenario, because let's say we have Australian dollar, JPY, or New Zealand dollar, and we had news to support the ID for that day, then likely the news is later during the day. Where, for example, if we have Euro news, it's during London session. So to then enter 12 hours after we already had London session and we had news, so the volatility spike overall, that does not make a lot of sense. Where if we have, for example, 4 hours after we had Australian dollar news to then enter, that still makes sense because there's still some volatility in the market right there to continue higher or continue lower. So it depends on the overall scenario, but if we're generally speaking, I would say no, we close the trade, or at least I close the trade. That's what I would prefer. All right, let's see. This is where the reading of the fair gap again starts, which is definitely getting quite interesting. We had the rejection right there, which we could argue, all right, it's not the biggest rejection, so a sweep of that high is not the craziest part. As long as we understand right here that ideally we prevent this bearish fair gap, or sorry, bullish fair gap from being created if we want to continue lower. And this should now be down candles to eventually create a new expansion phase continuing lower as well in an ideal world. If we want to still be bearish, and if we do not have that, and the reason why I'm looking at that is because if we do not create that and we get bullish fair gaps, all right, then we are starting to respect bullish fair gaps most likely and disrespect bearish fair gaps, which is of course what we want to see if we want to look for our ST plus re-entry right there. As well, when we have price action like this and we talk about a sweep versus a run on liquidity, when we have a run on liquidity like this and we close nicely with the fair gap exactly overlapping with the lows, I would always prefer a move exactly into the lows as well with the overlapping fair gap, instead of just coming into the fair gap right there, falling short of it right here of the low and then continuing lower. I, generally speaking, trust that move a little bit less than coming into the fair value gap area, or sorry, the fair value area right there to then continue lower off of that. And the reason for that is just then everything is mitigated. Then there's absolutely zero reason to return, because this fair value area, which is again just simply said the mitigation block in this case, if we were to mark out the order block, it would be this, which is not overlapping with fair value gap. So then it would be this right there. So the mitigation block right there is the fair value area, where if we come into that, then there's no reason to return anymore. So I would prefer that, which to me would indicate that we can still potentially continue higher here a little bit on ES as well. NASDAQ, let's see. Currently nothing super interesting. Let's see actually what the dollar is doing and what we were talking about with the 5-minute fair value gap as well. The fractal fair value gap right there. Where again, if this was on the 4-hour or the 1-hour and we had the high right there, I would not prefer this. I definitely would not like this. So it is very important to see how we will close right there on this 4-hour candle as well, which is of course going to take some time, but that's quite significant. Where ideally on the 1-hour, we would also want to see this current candle actually closing above the high in an ideal world. Otherwise, we might just sweep and get back into the range, which is of course not something we would want to see. Well, for the indices, it could play out nicely actually, because then the indices can just rely on their strength and can just continue higher off of that as well. Imagine if we swept a lot and then went back. Yeah, exactly. There we go. There we go. Again, it's still quite early, but the early signs are not super great. Not super great. Of course, in an ideal world, we all want to see just like this, like a spike higher, which does not happen. But it's definitely something to take into account. Feels like CPI and NFP news are introducing less and less volatility the last few months. It was insane during 2022. I 100% agree with you. And it's actually something we discussed in the Discord as well. It was a few months ago, I believe, where during this year, especially 2023, I'm referring to, it was not a lot of volatility, and quite a lot. It was actually very funny because you can see it during the forecast as well. It was quite disappointing where we were expecting, oh, finally we just displays out of range, and it just never really happened. So it does feel like that, 100%. Very odd. I wonder what's going on behind the scenes. Yeah, very weird. Because I also remember the 2022 and 2021 when you were there for NFP, it was like, or even CPI or FMC, whatever it may be, it was crazy. It was crazy. You would not want to get anywhere near price action. It just whipsawed like this and then continuing lower in the same exact session. It was crazy. It makes me feel like the marks are waiting for a larger trigger, whatever that may be. Very true. Definitely. Could be something with of course digital currencies, etc. coming up. Something we may not know about, of course. I can just imagine everyone going crazy if this is indeed a sweep, like it currently is looking out to be. Does not seem like the nicest run on liquidity. It seems like a nice sweep of liquidity, which is not ideal. And Q longs could be nice off 4-hour overlapping. Yeah, when this is a sweep, to be honest, could be quite nice for Nasdaq and ES right here, because then we can definitely look to continue higher right here and rely on their strength, because they are quite strong right now. So they will definitely have a rejection as well, continuing higher overall. With equities open currently. So here, I would want to wait for equities open to see what it wants to do, because we're still very low. We have no entry pattern at all just yet. So if we get that and we get to equities open and we get some nice price action, that could as well be quite nice. Yeah, exactly my thoughts as well, Cam. But I would want it to show energy at equities open. For sure. For sure. Seems like it's also waiting for that a little bit right there. Not as volatile anymore. Oh, in the first bullish 1 minute after equities opening. Yes, that's a deal. No. Full margin, equities open. Since we missed the NFP move, so we have to capitalize somehow, right? No, I'm joking. Don't. Please don't. Please don't sue me. It would be funny, right? If we're just sitting here all of a sudden at NFP and we're just gambling the next candle. Let's see. So now we reached that overlapping part, I believe. Yes, we did. So if we were to continue lower, then it would be the overlapping part for me right there. And if we do not respect that, then that to me would indicate that we might want to continue higher. See, we do have 50 minutes for backup right there as well. We eventually continue. Oh, we are actually inside of 50 minutes for backup as well, actually. This lines up with the overlapping 5-minute area that we had. It's not gambling if you have a biased narrative, context, and risk management. Yeah, exactly. Yeah. We can use that to cope. I remember the times when I actually had to address it quite a lot in the Discord. At the beginning, I had to address quite a lot that people were trading NFP. And again, if you want to trade NFP, FOMC, CPI, be my guest. But sharing it in a Discord that's a no-go move in my opinion, because then you're just enticing people into trading NFP, CPI, and FOMC as well, whilst the 100% win rate you currently might have, that will not last. It was a funny time. I remember that quite vividly. I bet Zeus also remembers that. Yeah, that's also where the meme originated from. I hope the MMT is not trading CPI tomorrow. Exactly. Yeah. It's very old. From when is that? Probably summertime, somewhere around that. Yeah. Last summer, yeah. Yeah. It's funny. Funny. It's very good. Let me see. Yeah, currently it's just really a matter of, well, we actually have a 5-minute ST going lower, which again, it's not looking great for a continuation higher currently. But again, might be wrong. And we can continue higher off the 15 minutes for gap or eventually the 1 hour for gap. But it's not looking great. Not looking great. So currently, what I want to say for ES, NASDAQ, indices in general, it's just a matter of waiting for equities open right now. So in the meantime, I'm also going to pause the recording right there to not waste too much of your time. All right, if we get a 15-minute fair gap, would you look for a confirmation on the 1 minute before entering on the 15-minute? Yes, in this case, yes. For it depends on the flow, on the trading plan overall. Flow trading plan, yes, ideally 1 minute as well, because we can use that extra confirmation to get a little bit more clarity. And for filtering process trading plan, it becomes more so confusing if you're constantly going to the 1 minute. That makes sense. Perfect. Let's see if we have something nice here on NASDAQ. Look for shorts on NASDAQ, ideally longs, but we'll have to see what happens. Let's see. See what the dollar is doing really quickly as well, heading into equities open. It is currently having a rejection of the 50-minute fair gap. All right, potentially look to continue higher. We did not actually come into it. Never mind. All right, so currently nothing really interesting. Let's see, NASDAQ. Equities open. Can still have some kind of volatility. Let's see. What would make you switch your buys for today? 15-minute bearish order flow. Yeah, if currently we start to disrespect this area right here, the overlapping area, then I would start to switch my buys. So for example, if we now start to create bearish fair value gaps going into that, then I will start switching my buys. So because then the whole area right here is for me deemed as being, well, showing signs of being disrespected. So then I will start switching my buys, if that makes sense. So that could also be 15-minute bearish order flow. So for example, on the 15-minute, if we come into the fair value gaps right there to continue lower off that, that could also be the case. And for ES, it would just already be continuing lower right there as well. Trading Twitter is basically just a piss measure in competition. Yeah, it definitely is a very toxic environment. Let's see. This is the first nice sign though, because we talked about the fair value area right there, pushing lower, not creating a new fair value gap. So if we can get a nice ST sitting right there, plus a re to eventually continue higher, could be nice. It would be so great if we have the NFP on Mondays or Tuesdays. Oh, it would be too good to be true. It would be very, very nice. And just having the volatility for the rest of the week would make it a little bit easier. The overlapping parts also daily unusual context though. What's heavier is context? Overlapping defense or unusual context? Let me see. On the daily. Right there. Yeah, here it really depends still on what we are going to do, because this candle will likely still determine if this is going to actually create a daily fair value gap or not, if that makes sense. There's a weekly context, and there's also weekly context actually, yes, to continue higher off that. So in this case, the weekly context is stronger still, and we are respecting it nicely. But of course, we have to take into account both sides as well, for sure. So this will be quite interesting. Because if we do not get a rejection right now below those lows to continue higher, then for me, I would currently in the next coming hours, next coming minutes, call it a day. And then potentially come back in PM session, see where we are heading, see where we are at. That is 1 PM around that time frame. And then seeing, all right, can we still get involved? Is there still a nice move to be a part of, or just leave it? Can you explain the daily value? Yes, for sure. So here currently, since it is only a wick, there is no real unusual context to be a part of currently, if that makes sense, because there's only a wick right there, so there was no expansion phase. If this was an expansion phase, for example, then this would have been a little bit different right there, because then it would have currently actually prevented from creating a Vervagab higher, if that makes sense. So a sweep, again, I'm talking about a utopia right here, where if we get a sweep right there, ST plus the re, then I would be interested. But if we do not get that, then I would still want to wait or not do anything. Oh, check NQH 2024, we get different need. Okay, let me see actually. Let me see. Is this, wait, I'm not too sure. Let me just go to the actual contract. I'm not too sure how TradingView has done that, but this one right here, this is still the same, no? At least for me. Are you looking at a CFD by any chance? Let me see. Oh, yeah, yours looks a lot different. That's interesting. Yeah, so if it was, let's just paste it right there. If it was this situation, then it would indeed be a little bit different, because then we are clearly denying overall the bullish momentum. So it would indeed be different. That's quite interesting. Quite weird. All right, the rejection based on the mid time frame currently is looking quite nice. So let's see, can we actually follow through on ES? Not a nice rejection currently. Nasdaq is having a beautiful sweep right there to potentially continue higher off of that as well. Starting to disrespect fair value gaps. Again, the signs are there where we do not create new fair value gaps going lower, which is of course a great sign. And we also see old fair value gaps, which already we came into. So those are mitigated gaps. So these are not relevant anymore. If we do overtake them, of course, it's a nice indication that we do want to continue higher as well, creating bullish fair value gaps on the other side. Then we see the true switch of momentum, as in who's in control of the market right here, where the premium rays are not following through, not strong enough anymore. We start to create discount rays. The control is transitioning from bearish to bullish momentum. Is that a fair value gap? That is indeed a small fair value gap right there. We do want to create that. Yes, surprisingly has the weaker price action currently. As over on the higher time frame, it has been stronger. We have set on is doing the wick. Yeah, okay. Yeah. Minutes for Vegap we can't forget about. So ideally, that 50 minutes for Vegap right there, once we do come into that, ideally we see a rejection. And once we see the rejection, we create a new 5 minutes for Vegap going above it right there to continue higher. Is unusual context purely FVG because that's just a volume event on the daily? Not purely fair value gap. It also depends because it starts off with either the non-creation of fair value gap or with a fair value gap itself. Yeah, I wouldn't use unusual context using volume balances. No, I would not use that. No. Only actually fair value gaps for me. And about a bit above the 50-minute fair gap, there's the avoidance of bearish for our fair gap as well. Would be being good to sting into that before the rejection if we are looking for high price. Exactly. Love that logic, by the way. Love that. Really good, really good. Would be ideal right here if we also sting into that, because then we are not creating a bearish for our value. So in an ideal world, and I like to create those scenarios in an ideal world, because when it does happen, then you know exactly that you should act on it. And if it does not happen, you know you should act on it as well, because then you need to stay out of the market, ideally. So right here, ideally, we come into that to get the rejection, to then continue higher off that. It could be quite nice. Price overtaking the Verweij gap, then if it overtakes the order block, then create another expansion leg higher. Is that enough to trust the bullish stance? Because there's still the order block mean threshold to monitor if the rejection happens there also. No, yeah, I personally do not look at the mean threshold anymore. So the mean threshold for me is where if we do not respect it, etc., then I'm just looking to already as a sign of disrespect, if that makes sense. But you are indeed correct. As in the order block overall, right there is ideally what we should also overtake to then continue higher. So I personally do not really monitor the MT. Looking quite nice overall. Let's look at ES really quick. ES just significantly weaker. Quite interesting. Quite interesting. And we have a very small Verweij gap sitting right there and a bigger Verweij gap in the making as well. We can come into one of those right there. So continue higher off that. That could be quite interesting. Then the whole order block that we had as well will of course turn into a breaker block. A failed order block is essentially a breaker block. But if ES is so much weaker, can be suspect to trust the bullishness of Nasdaq. Yes, for sure, for sure, for sure. And that is why we do have to take into account the 50-minute Verweij gap right there that we are coming into, for sure, for sure. That's why it's a bit odd to me that we do not have the stronger instrument right there pushing higher. So then this could definitely, the push higher could as well very well be manipulation. How do we define weaker and stronger pairs between correlative pairs? Example, EU and GU. It's quite a subjective topic. And what I mean by that, it's quite subjective, but also it's quite logical. And the way I see it is if we just compare here to NASDAQ to ES, then the same highs that we have to the left right there on ES are already taken out right there. So very simply said, ES overall on the higher time from here has been stronger. And it's the same for EU and GU, where if we compare the highs, compare the lows, compare the displacement that we have, then EU right here has been weaker than GU right there. And GU has always been a little bit stronger currently. So it's very much looking at overall the current price action where we are at. Might help to check Euro GBP as well. For sure, for sure. Euro GBP as well, definitely. And by Euro GBP, if we look at, for example, Euro GBP going higher, then we can argue Euro US dollar is stronger than GBP US dollar, where currently Euro GBP is, I believe, lower, or at least it is heading a bit lower. Does not need to be exactly lower, but overall it's been heading lower right there. So we can confidently say GBP has been stronger than Euro. So then you would, if you want to trade the weaker pair, you would trade Euro US dollar, stronger GBP US dollar. All right, inside the 15-minute fair value gap. Let's see what we want to do right there. There's some news at 10, not sure how impactful it would be since NFP would be higher impact in terms of news. It would definitely have a slight impact for sure. Let me actually see the details on news. It would definitely have some kind of volatility though. Definitely. Will it be as impactful as NFP? Probably not, but it will definitely have some sort of volatility coming with it. Consumer sentiment. Yeah, definitely. Definitely. Brad Folder news. Create new expansion after rejecting order block open. That's quite interesting. That is quite interesting. Let's see right here. We are definitely expanding higher. My only concern is that we might reach the highs before we even get anything. So let's see if we do have anything to deal with before we actually reach the highs. There's of course still an area that where we can overall reject as well. The expansion on 1 minute as we're rejecting 5-minute order block open. Nice, nice, nice. I'm bullish. Yeah, the only thing that I am thinking about right here as well is the same example that we actually had on Euro CHF. If we quickly go towards that as well, where a lot of bullish fair value gaps or bearish fair value gaps is not necessarily always a great indication that we are doing something. And let me actually find the price action right here. Where was it? It was sitting right there. This one, where when we have a lot of bearish fair value gap or a lot of bearish momentum, it seems like right there, it's quite similar to current indices situation. Then it could just reach for an opposite PD ray, for example, Nasdaq, the highs right there, to then continue lower off of that instead. So the way we sort of differentiate this is when we do come into those 5-minute fair value gaps right there, I would want to see those fair value gaps actually hold because that indicates order flow. Where order flow here currently on Nasdaq for bullish price action has never been confirmed just yet. So that is a little bit more difficult in this matter as well. So it's ideal to get your mind right that you do not want to chase price here. It reminds me quite a bit of Euro CHF. Let's see what we want to do right there as well. And currently can confidently say that this move is over. As in, there's no good scenario anymore here. Let's say it has a very deep retracement right there. Then I would not want to get involved because the retracement is too deep and the retracement is too heavy before we actually reach the highs. And let's say we get a 5-minute fair value gap right there. Then the RR is not worth it anymore because my stop loss right there would have to go below the breaker, something like that. and becomes a negative RR. So there is no good scenario here playing out anymore, which is a bit of a shame, but it is what it is. YM looks better. Let's see. Let's see. It definitely looks still a bit better right here. If we can get a move higher as well right there. See how the 1 hour wants to close as well is really important here to take into account. Let's say Nasdaq reached above those highs right there, and ES, etc. has the 1 hour value gap. ES and YM has the 1 hour value gap going lower. Then that could be interesting, definitely to keep an eye on at least. If you do not want to sweep those highs and ES and YM respect the 1 hour value gaps right there to potentially continue lower as well. Big rejection right there based on that wick. So you see the dollar's doing. Continuing lower still. Again, not the greatest signs right here that the dollar does want to continue higher immediately. Not the best signs. The 50-minute fair value gap gets respected there, and we continue higher. Create a new 50-minute fair value gap could overall be nice, but not the greatest signs. Quite a big rejection, currently what we're seeing. So we have 5 minutes fair value gaps right there to work with as well. Again, ideally, a fast move right here, continuing higher immediately. Not a big retracement right here. The furthest it can go is the overlapping part right there for me. Then continue higher off of that. Yeah, it's very ugly price action. And this week, to be honest, has not been the prettiest price action for the indices, where 930 has been consolidating quite a lot. Quite a lot. Not the nicest. $50 minutes. Let's see. Yeah, exactly. YM and ES right there will also be a very important fair value gap right there for ES to see if we want to continue higher. Quite an important fair value gap. 15-minute fair value gap is one in the making, and once that 15-minute fair value gap closes, we also have a 1 hour fair value gap going lower. And that is the same situation for YM. I am not too convinced right here on bullish price action. This one right there, let me see, 50 minutes. This or even Nasdaq right there. It could be interesting. The only thing here is that I am not too convinced on bullish price action. And the reason I state that is right here, if it wanted to take out those highs, then likely the 5 minute right there should have already rejected. So currently the ID for longs, like mentioned actually earlier, there is no good scenario here. As in, either we get a very big retracement, and the big retracement indicates to me that there's some kind of rejection that we do not want to continue higher even. So that is not a great sign. And other than that, that would lead me then to the 50 minutes fair value gap. I do not really want to trade off of that. And on ES, that is a very similar scenario right there, where then we have the 50-minute Verweij gap, but we're also creating a 1 hour Verweij gap right there. So it's all in contradiction with each other currently, where it's like, all right, we have potentially this scenario, also this scenario. There's nothing really clear for me, if that makes sense. Let's give it a few more minutes right there. See what we want to do. This is not looking like it wants to continue higher currently. I think we might have to do some live sessions in the PM session, because it seems like the PM session right there, overall, the past few weeks, actually, the PM session had the major moves, where equities open in itself was not that interesting. Not that interesting. But however, we have a 4-hour candle to be complete within 5 minutes, and it seems to be a sting if we zoom out. Understand, however, that the lower time frame do not give good signals. Yeah, you're completely right. 100%. The 4-hour in this case is where we would expect higher prices right there. And then it leads me sort of back to the contradiction statement, where it's like the 4-hour seems very nice, bullish, and then the lower time frame seems, all right, why is making such a big retracement? It's like all these different factors that are just not super interesting overall. So for example, the 5 minute right here could be quite nice, and going into the 1 minute, there would be one boundary here where I would definitely where for me it would be okay to go into the 1 minute. For example, this right here, if we do not create the 5 minute Verweij gap, current candle expands higher right there, then we could go into the 1 minute right there potentially and see if we get 1 minute ST, 1 minute RE, because we do have a big 1 minute ST going against us right there, to then potentially here catch the last bit of the move right there, targeting those highs. So we fill with the first part right there, fail to create a 5 minute Verweij gap, but we do ideally want 1 minute Verweij gaps higher then. I have a question. When we have, for example, a Verweij gap, a 4 hour, if we have if we have a reset of 5 minute, do we need to take this trade even if price is above the high of the 4 hour Verweij gap? Yes. As in, it depends on the scenario, right? Because in this case, for example, right here, when we come above that right there with the 5 minute re, we are already very close to the target. So it changes a little bit. But if, for example, target and the highs, the context highs were still a little bit higher, then right there, we can still trade above it. But in the example where, I'm not sure if that was the question as well, in the example, if we are not above the 4 hour Verweij gap high, then we can still look to take the trade if we have the 5 minute ST plus RE. But of course, it's always a little bit higher probability when we do reject above the high right there, above the fair value gap high, if that makes sense. Currently, let's see on the 1 minute. All right, on the 1 minute, we have a 1 minute ST right there. So with this rejection, it's quite interesting to see what we want to do overall. This in itself is a trade ID, because now we can refine the stop loss more right there, which still is, it's still not a 1 to 2. So I don't like that, but it is already a little bit better, because now you can refine your stop loss to this area right here, targeting the highs right there. The last high sitting right there as well. When should we stop looking at breakaway gap? How low can we go in terms of time frames? In a flow trading plan, there is no limit. As in a flow trading plan, there's no limit, as in you can go into the 1 minute, etc., to see what we actually want to do. For filtering process trading plan, I usually don't go lower than 1 hour, for example, because the 5 minute, 50 minute is where I only go over my entry pattern. So I only use it as an entry pattern time frame. So the breakaway gaps on the 4 hour and above are more interesting to me, where the 1 hour is not super relevant to me. All right, so if this was a trade ID right there, then that would be the stop loss to continue higher right there. We have an ST going against us again. I do not really like the rejection right there that we are having overall, but I could see the trade ID. I could see it. Is it something I am willing to take? No, it's not something I'm willing to take, simply because of all the conditions that happened right there. And it did not play out as I wanted it to, as I mentioned it to. So then I do not want to get involved, even if it plays out. Let's see. Yes. Continuing higher as well of the 5 minute value gap. Creating that 1 hour value gap in 1 minute. Then if we were to continue higher, it's a good time to study the fair value gaps. Then ideally the next candle here should be an up candle. Ideally, next candles should be up candle to create a new fair value gap going higher as well, right there on the 1 minute. What was the answer? The answer for the breakaway gap, how low can we go in terms of time frames, is flow trading plan, no limit. For filtering process is the 1 hour is the limit for me. There it is with news as well, spiking higher a little bit. Do you have a dog? Can you hear it in the background? Yes, I do have a dog. Yes, yes, yes. Yeah. Yeah. Looks just like Ario on Mondays. Exactly, yeah. Yeah, it's funny. EU. I don't want to look at EU. I wanted to look at ES and NASDAQ right there to see. Nice candle close. That's a good candle close. That's a nice candle close. If we can create the 1 minute for Vega higher as well, it's a good candle close. A good candle close to continue higher, potentially right there. That's not that great. And preventing that for Vega right there from being created is not a great indication. And it just, overall, with the volatility that we have in the market, we have NFP, we have equities open, and we have the consumer sentiment. There is just a lack of overall movement, as in we are not convincingly moving towards highs, towards lows, which for me right here would also still come back to the conclusion it's a little bit seek and destroy. It's a little bit consolidating. See, how do you know when it's just trying to close all liquidity in the fair value gap, seek and destroy, or going to move higher off the fair value gap, especially on the 1 minute? Yeah, it really depends on what the higher time frame as well is doing right here. On the 5 minute, for example, the rejection that we're having right there is just not a great indication that we do want to continue higher. So how do we know it? There's not a certain moment that we can know it, but all the signs that we currently have leading up to this 1 minute time frame entry right there as well, it was just not that great. And for me, would argue again, with all the news, all the volatility that we had, and still the lack of momentum that we have, still the lack of displacement that we currently have constantly, is just like you mentioned it, a great sign that we might still be in seek and destroy right there, if that makes sense. Do you ever check the future of individual currencies to identify opportunities in the filtering process? I used to do that actually, and in very early enrollments, that's why on the crosses list, I do actually have the futures sitting right there as well. I do not do this anymore. And from my experience and from what I noticed as well, is that right here, this could be interesting, but it takes a lot of time, first of all, which is of course, all right, the least of my concern. But next to that, it does not tell me anything different than the pair itself from what I noticed. So then the futures became a little bit irrelevant for me. I did used to do it, and you can definitely see opportunities coming as well. For example, if Canadian dollar is very strong or very weak, then you can see an opportunity coming on Australian dollar, Canadian dollar, for example. But overall, you'll also see it coming in the pair itself, if that makes sense. Throwback to enrollment 1 and 2. Yeah, that's exactly. 5 minutes. See if it wants to create a VWAP higher as well. And at this moment in time, I am not super interested in overall this price action anymore. Simply because the 1 hour right there is just not displacing higher anymore. It's not really moving lower as well. If anything, the 1 hour VWAP that we have could be quite interesting to continue lower from. But then we're switching from bullish to bearish, from bullish to bearish. It's not a great sign overall for price action. 5 minutes VWAP failed to be created right there. But yes, futures for crosses just makes it so you have to analyze 3 pairs instead of and so parallelizing you have more than usual, but feel free to try it out. Yeah, exactly my thoughts. Feel free to try it out, of course. And I believe you can't get to that conclusion if you have not tried it. So if you have not tried it and you want to, then feel free to do it. It's just my experience that it was just not that beneficial anymore. 3 bearish 4 hour VWAPs of the M VWAP, and I was not able to catch any of them. Oil. Yeah, all good. I didn't catch any of this as well. And to be honest, I'm not too bummed about it because I'm more so looking at the last piece of price action that we get right there to continue lower off that. Although it's a bit unfortunate that with NFP, with the volatility at the end of the week right here, you'll just see the move might be gone before you even get the chance to get involved. And that is always, when you have a monthly context right there and you do not get involved, it's a little bit frustrating, right? Because you waited basically all this price action right there, all the messy price action, to then have the very clean price action, and you did not even get a chance to get involved. It's like, yeah, that's exactly what I'm saying as well. Been waiting for the bearish month for VWAP for some weeks, but got paralyzed when it did reach finally. That's exactly it. And it's a bit of a pain in the ass, to be honest. It's also a part of trading where the fast moves, for some reason, it's weird, but the nicest moves, they happen very quick. And being a part of them sometimes does not happen. And yeah, it's also a factor from my experience where currently, to be honest, at that moment in time, I did not really see a great opportunity to get involved as well. So to be honest with you, I do not think you really missed a significant move. As in, yes, of course, it moved lower, but did you miss a significant clear entry? Not really, in my opinion. And it can be dangerous though that when you're waiting for weeks and weeks and weeks for nice price action, that when the price action arrives, you sort of get stunned, where it's like, oh, I need to do something all of a sudden. And then it's like, where do I get involved? What do I do? And that's why it's, yeah, quite important to keep the routine as well. In hindsight tested, and I would have stopped out twice if I'm involved. Yeah, exactly my thoughts as well. And we discussed it earlier as well, where if I were to get involved, I would have likely not even caught the move, and I would have likely been taken out of the trade. Hello guys, just got back from work. Welcome, my friend. Welcome. You didn't miss much, to be honest. There's not a lot going on right here. Well, it's quite interesting price action overall to avoid. It's great price action to see how we do not want to get involved. We mentioned the entry that we had potentially on NASDAQ right there. And I mentioned as well, I do not really want to get involved because there's just overall very suspicious price action where there's a lot of contradicting things that is happening in price. January somehow looked worse than December. Yeah, it did. It did actually. Quite interesting. It did. January also flew by. But other than that, the price action was mwah. You just got to come out of this lethargic PA. Yeah, 100%. All right, let's see what we are doing. It's again one of those sessions where AM session is quite slow for indices. And it surprised me because overall, every session we have currently looked at for indices has had a slow AM session where the PM session has picked up the steam. Very interesting. DXY moving up. Let's see. Aha, there it is. All right, so this now is getting quite interesting. Where if we, on the 1 hour, not an exact overlap for Fair Gap, but this currently would indicate to me that we are not sweeping and that we are running the liquidity more so. Finally, we have some movement right here. So the 4 hour, if this closes, 4 hour will have a very nice close towards the monthly Fair Gap right there as well. In that moment right here, I would also not really be interested in ES, NASDAQ, NYM, potentially shorts, look at shorts. So the 1 hour Fair Gap continuing lower right there. But other than that, I would want to wait. Once the dollar reaches that monthly Fair Gap, that is when ES, NASDAQ, and the indices could be interesting to look to continue higher overall as well. Please continue. The US dollar red folder on Monday as well. Okay, that is quite interesting. That is definitely quite interesting. If we can catch a move on Monday already, could be very interesting. All right, then in the meantime as well, before I'm going to start repeating myself here, I'm going to end it. And we are going to look at price action, hopefully in a different manner next week again, where we have a lot more high probability conditions as well. Tomorrow on Saturday, we have the breakdown as well for the Fair Gap session. So it will as well be right here. I will share the event in the announcements right after this. And then I'll see everyone at the next one. All right, perfect. Thank you.